Okay, let's dive into this. Usually when geopolitical stuff flares up, you kind of expect a certain market reaction.
Right, the standard playbook. Gold, oil, they go up. Riskier things, maybe like Bitcoin, pull back.
Exactly. But the sources you shared for this deep dive, articles, research, your notes, they paint a slightly more complex picture of the immediate reaction this time around with the recent Israel and Iran tensions.
Yeah, there were some unexpected bits.
So our mission here is really just to unpack the key insights from these sources on how this specific event hit the Bitcoin market.
And what's really striking is just how fast that initial reaction was, according to the reports.
Yeah, talk about speed. The sources mention Israel launching airstrikes around, 22.50 UTC on Thursday. Explosions reported near Tehran.
And right after that, Bitcoin took a pretty sharp, quick hit.
The articles noted like a 2.8% drop from about $106,000 down to $103,000.
Yeah, roughly. And all within like 90 minutes of those reports hitting.
Wow, that's incredibly fast.
It is. And as the sources really highlight, that sudden dip, it definitely caught traders off guard.
Right. The coin last data mentioned in the materials showed just massive liquidations, didn't it?
Huge. Something like $427.84 million in long positions got liquidated. Just poof, gone in 24 hours following that news.
And that was right after Bitcoin had actually been doing pretty well, sort of climbing back towards its May highs just days before.
Yeah, exactly. So the timing was pretty brutal for those long positions.
And then there's the contrast. The research points out over that same 24 hours.
Yeah.
While Bitcoin was getting hammered and triggering all those liquidations, gold actually went up about 1.44%.
Okay. And oil?
Oil jumped even more, like 11%.
Wow. Okay. So a really stark difference there in the immediate aftermath. Classic risk-off for gold and oil, but hitting Bitcoin hard initially.
Precisely. But one perspective cited in the articles adds a wrinkle to this from Anthony Pompliano.
Ah, yeah. Pump. What was his take?
Well, he noted that this specific initial reaction, Bitcoin down, gold and oil up, it looked almost exactly like what happened back in October.
Oh, right. When Iran launched rockets at Israel.
Yeah.
The coin dipped then, too, initially, didn't it?
Yeah, a similar plunge, around 3%, I think it was.
Okay, so that parallel he draws is pretty interesting. Did the sources say if that pattern held up last time beyond just the first few hours?
They did. That's the key point Pompliano made. He pointed out that back in October, even with that initial drop, Bitcoin actually ended up outperforming gold and oil over the first 48 hours.
Huh. So the initial knee-jerk reaction wasn't the whole story then?
Exactly. So he kind of raises the question, could history repeat? Though obviously the sources stress there's still a lot of uncertainty this time around.
Sure. Always uncertainty. And speaking of different views on volatility, your notes also had that comment from Samson Mow.
Right. Saying this is the time to buy when it feels scary.
Yeah, and apparently directing that advice kind of pointedly towards GameStop's CEO, Ryan Cohen.
Yeah, what's the context there the sources provide?
Well, material links Mo's comment directly to GME's reported move back on May 28th. They used funds from a convertible notes raise.
To buy Bitcoin?
Yeah, quite a bit. 4,710 Bitcoin for about $513 million.
Wow, okay.
So it really underscores that view, right? Some players, even big corporate ones, see these fear-driven dips as, potential long-term buying opportunities.
Yeah.
And they're acting on it with serious capital.
So real conviction buying, essentially.
Seems like it, based on the source material.
And if we pull back to the bigger geopolitical picture described in the sources, things are still pretty tense.
Oh, definitely. The material mentions Netanyahu's reported statement about continuing operations targeting Iran's nuclear program.
And then Khamenei's reported response anticipating severe punishment, plus those reports of drone retaliation.
Right. And the U.S. Secretary of State reportedly making it clear the U.S. wasn't involved in the strikes.
So the core message from the sources seems to be lots of uncertainty still lingering about what happens next politically. And that's weighing on the market.
Absolutely. So what really comes through from all these sources is this picture of a market kind of grappling with these incredibly fast reactions to external shocks.
Yeah, shown by those rapid liquidations.
And you've got these almost contradictory signals from analysts. One sees a possible repeat of history, suggesting recovery.
While another is basically saying, buy the fear with conviction.
Exactly. All playing out against this backdrop of just ongoing, undefined geopolitical risk.
So the key insight isn't just that markets get volatile, but maybe how quickly and intensely the market seems torn between different paths forward now. It makes finding the right move really debated and, well, uncertain.
Yeah, understanding these dynamics, the speed, the asset divergence, the historical echoes, the different expert takes, it's pretty crucial if you want to make sense of why the market's moving the way it is when these outside events hit.
So thinking about that speed, these geopolitical shocks hitting so fast, and these really different expert views we've just discussed from the sources, how do you, the listener, decide? When is the right time to act, or maybe just as importantly, when is the right time not to act in markets that are clearly this volatile? Something to think about.